Hello, good afternoon, everyone. Welcome to the fifth webinar that Thomas Westcott have done. My name is Patrick Tigwell. I'm a general practice partner at the Exeter and Tiverton offices, and it's my pleasure to be your host for this afternoon's webinar. For those of you who were on the call last week, we discussed the Job Retention Scheme, JRS, and for this week, we're discussing the equivalent for the self-employed, the snappily titled Self-Employed Income Support Scheme, or SEISS. Alongside me, we have the creme de la menthe of accounting. In the blue corner, we have my Exeter colleague, Chris Hill. Now, for those of you who followed the output that Thomas Westcott have been putting out regarding coronavirus, Chris has written many of the blogs. Actually, he's written one on the topic that we're discussing today. He has the reactions of a mongoose when it comes to writing something new that when something to the government. So no sooner has Chancellor Rishi Sunak put down his pen and Chris has a blog ready to go. In the red corner, we have my North Devon colleague. We don't hold that against him. Our head of tax, Mark Tibbert. Now, Mark heads up our COVID-19 team at TW and coordinates the output that we put out. And he was also on the call last week, so he's a very multi-talented and versatile chap. In the background, we also have, as usual, our head of marketing, Jamie, and he'll make sure the technology works for today. Well, hopefully, anyway. Just to say, well, Jamie's asked me just to say to everybody that the seminar is being recorded and he will provide a link to the YouTube address later. So what's the plan for the webinar today? We had a 4-course meal last week. Austerity is bitten, so we have a 3-course one this time. The starter will be Chris in a minute giving us an overview of what's happened in the week, and actually an explanation of what the self-employed scheme is all about and how it should work. I'll then pass over to Mark for a more detailed view, including some numbers to be warned for that. I'd also say at this point that both of the guys have some PowerPoint slides. So 2 things here. Firstly, don't let it put you off. I've seen the slides and it's not death by PowerPoint. And 2, it's the first time we've used shared screens and this sort of thing. So if it all goes a bit Pete-tong, just bear with us and we'll hopefully get it right. After that, it'll be more of a question and answer session. We've got a bank of questions that obviously you guys have asked when you registered. If you haven't yet asked a question, you can still do so using the chat or the Q&A buttons on your Zoom screen. If you'd like to remain anonymous, just put anon before your question. And do remember that it's quite a technical area, a lot of this. So if you're going to write War and Peace, we'll probably have to, sort of attend to your question after the webinar. And if you're a client of TW, then what we'll probably do is refer you to your usual partner to give you an in-depth answer. So, I would say that we will answer in true sort of take heart fashion. We will attend to every question. And if you forget to ask something or you think of something after the seminar is finished, you can also email us at events@thomaswestcott.co.uk. So that's enough waffling from me. I'd like to pass over to Chris, who's raring to go there, for his update and explanation of what it's all about. So Chris, over to you.
Patrick, thank you. And here we go with the technology. See if it works. It's on my screen. I hope it's on your screen as well. A nod from Patrick. Yeah, thumbs up. That's good. So what are we covering today? Well, 3 topics. I know Patrick's really just mentioned the self-employed scheme. A couple of other things to pick up on that are topical. The first one being the bounce back loans, which have gone live this week. And also just a little bit on the additional funding that has been talked about, has been made available to local authorities sort of on top of the sort of rates-based grants that have been distributed over the past few weeks. So, moving on to the first of those topics. There we go. Right, bounce back loans. These have been put in place very quickly, and it's really pleasing to see that this has happened. It was one of the initial observations that we had in terms of the original loan funding, the CBILS, the Coronavirus Business Interruption Loan Scheme, that it was quite unwieldy. If you were a smaller business and you wanted quick access to cash, it wasn't being delivered that way, and it never would in terms of the way it was being administered. So only last Monday, the Chancellor announced that a new loan scheme would be made available, primarily available or focused on the sort of SME market. That went live only this Monday, and I think it certainly worked in terms of getting businesses quick access to cash. I mean, just some figures that I've got to hand. In the first 5 weeks of CBILS, there were 25,000 successful applications. It took 5 weeks to get to 25,000 applications. In the first 24 hours of the bounce back loans, 69,000 loans were approved, and the vast majority will have got their money within 24 hours. So in terms of giving fast delivery to cash, that is working. One thing you will notice, I have underlined the word loans. I mean, a lot of the government help so far has been in the form of grants. You think of sort of job retention scheme and what we're going to talk today about the self-employed. Bounce back is a loan, and so it's a financial commitment. It's a long-term financial commitment that people in business are committing to, and ultimately it will need to be repaid. But what it's really about is providing some short-term cash injection into business to get them through the immediate sort of short-term cash flow issues that they may have. Whilst it's very much focused and being billed as something for small businesses, in fact, a business of any size can apply for it. There's no restriction on the type of business. It can be a company, it can be a sole trader, it can be a partnership. All these are eligible. Loan amounts vary from 2,000 to 50,000, although there is a cap on that at 25% of your turnover. So, for example, if your turnover is 100,000 per annum, you're only going to be able to borrow 25,000 under this scheme. Unlike the CBILS, this particular loan arrangement will be 100% government backed. The government will guarantee to the banks the amount borrowed. And also, lenders are not able to take personal guarantees from people who borrow from them under the bounce back loan, and neither can they, if things go wrong, neither can they seek to recover it against personal assets such as your house. So there's an element of comfort there in terms of, yes, there is a financial commitment, but there's some sort of protection there for individuals who may be taking advantage of it. Just set out there some of the basic terms that go with these loans. Up to 6 years in terms of the repayment, interest free for the first 12 months, no capital repayments whatsoever for the first 12 months. Again, that's different to the CBILS. There'll be no arrangement fee, or more correctly, probably the government is picking up the tab for the arrangement fee. If you get to a position where you feel you can repay early, you can do without incurring a penalty, and the interest rate has been fixed by the government at a very low 2.5%. So again, in a lot of respects, it's making it very practical and attractive to people to take advantage of. But again, do bear in mind, it is a loan. The application process is online. There is a standardised 2-page application form to complete for any of the banks that are participating in this. And a lot of the, again, and this is where it differs from the CBILS, a lot of the application process is all about self-certification. They're not asking for lots of supporting information in terms of accounts, forecasts and things like that, which is being asked for under the CBILS. But basically, you will need to certify that you and your business have been impacted by coronavirus in some way. You do have to certify that you weren't a business that was already in financial difficulty at the end of December. You need to certify that you are a commercial operation and also that you've not had a CBILS loan. Because I know I've got a position where some of my clients have already secured a CBILS loan. They cannot then also go and get a bounce back loan. One of the practical issues at the moment, given it is in its infancy, is that banks typically, I think I've probably seen one exception to this, but typically are only taking applications from their existing customers. So if your bank, if you sort of don't bank with one of what we call perhaps the mainstream banks, you may have to wait to be able to access this funding. I'll come on in the next slide just to show you who at the moment is offering the bounce back loans. It's all about a quick turnaround. You know, the application process is simple. And in reality, this is the way it's working. You know, I did say the sort of 69,000 successful applications on day one or in the first 24 hours. The vast majority will have got their money the next day. And in fact, again, I've seen examples of some people applying in the morning and the funds being available to them in the afternoon. So, you know, quite slick in terms of how the process works. Just coming back to the situation, if you're a business that's already taken advantage of the CBILS, the original loan scheme, the terms of the bounce back loan are that much more attractive than the CBILS loans. So you have the opportunity to approach your bank with a view to getting it transferred across. Again, that probably won't happen instantaneously. It's something to bear in mind if you have already secured some borrowing through the original scheme. In terms of the lenders, those are the lenders as of about half an hour ago. Three more had appeared this morning, so I had to go and try and work out how to recreate my slide. But so as you can see, it's quite limited in terms of the banks that are offering this. Albeit the majority of people probably do lend with them or do bank with them. But you know, if you sort of bank with someone a little bit less mainstream, you're not there yet. It's not going to be available. So that's the bounce back loan. Moving on to the funding that's been made available via local authorities, the business grants. You may be aware that sort of over the past few weeks, grants of either £10,000 or £25,000, depending on the sort of type of business that you operate. You know, who have business premises, who are registered for business rates, even though they may not actually pay business rates. There's been a significant amount of funding finding its way into the business community through this route. The funding that's been made available here, as you will see there, is just over £12 billion. As of the 3rd of May, only about 70% of that had actually been allocated and paid out. Now, some of the 30% difference there, some of that may well be claims that are still in the system that local authorities are dealing with. But again, I think the message is that there are still quite a lot of businesses there who haven't made an application for funding from their local authority. So again, the message from me is, if you have business premises, if it has a rateable value, do please check with your local authority that you are not actually missing out on some funding from that source. As with a lot of what's going on, announcements come thick and fast, daily, weekly. At the weekend, the weekend just gone, it was announced that local authorities would be allocated a further £617 million to provide some additional funding to businesses who do incur premises costs, but may, for whatever reason, not have been caught by the original scheme, i.e. they're not liable for business rates or operate from premises where there is a rateable value. Now, some of the examples that were given in the government press announcement on this, for example, businesses that operate from shared office space, regular market traders, small charities, and also bed and breakfasts that may pay council tax as opposed to business rates. Those were just some of the examples. I think it's a case of watching the space in respect of this, because as I've said there, this is discretionary. Whilst the local authorities will be given a sort of an outline of what and how to deal with the funds, it will be up to each local authority to decide how they're going to allocate the funds that they receive from this source. So again, if you think that you've missed out, but you may fall into this sort of category, the message really is speak to your local authority, keep watching their website just to see what announcement they make on this. But it will vary from location to location, just who is going to be eligible and how it's going to be distributed and how much and things like that. But again, there's something there in the pipeline that we should know more about in the next few days. Okay, and then we move on to the self-employed income support scheme. So this is financial support that's been provided to people who you would call who are self-employed. Now, we're not talking here directors of limited companies. They are not technically self-employed, as I think a lot of people are now realising because of the various support measures that have been made available, and who qualifies and who doesn't. So really we're looking here at sole traders, or we're looking here at partners of trading partnerships. This support, unlike the bounce back loan, is a grant. It's not going to be repayable. It's not a loan. So people shouldn't be averse to sort of looking into this. It's not going to leave them with something that needs to be repaid at a later date. And the way it works is, in simple terms, it's based on an individual's taxable self-employed earnings in the 3 tax years, 2016-17, 2017-18, and 2018-19. And basically the calculation is a very basic calculation. It's looking at what are the self-employed earnings from that year. What does that average down to on a monthly basis? What is 80% of that? And the government will pay self-employed people 3 months of that calculation, which will be capped at £7,500 per person. And the payment, the idea is that the payment effectively is to cover March, April and May of this year, and will be paid, well, initially they were talking sometime in June. It's now looking like, as we'll come on to in a minute, it's going to be perhaps a week or two sooner than that, which is good for, certainly for some people. As with the various grant supports that have been coming through, it is taxable. But again, we're looking here at the here and now. It's about getting the cash to meet business expenses and or to live in the short term. But it will ultimately be taxable and will form part of any taxable income in the current tax year. People can apply for this particular funding from the 13th of May. Again, I'll give you a little bit more detail on that in a minute, but so that's starting next week. And the intention is that once an application has been lodged, the funds will be available within 6 working days of that and in the bank account. So what other sort of conditions are sort of attached to this? I've set out sort of the basic concept that it's based on an average of what your self-employed earnings are over a 3-year period. I'll just add to that, if, for example, you'd only traded for 2 of those years, the latter 2 of those years, it's an average of the 2 years rather than 3. But as a minimum, you must have traded for at least 2018-19 and have a tax record with revenue. It's on your tax return for that particular year. If you have, for whatever reason, only commenced trading on a self-employed basis since the 6th of April 2019, you won't be eligible for this particular grant funding. So, how do you work out if you are eligible? Because there are conditions attached to this. First thing to do, you would look at the most recent year, the 2018-19 year, and your self-employed income must not be more than £50,000. Also, it must be more than half of your total income in that particular tax year. So, just as an example, someone who has, let's say, £40,000 worth of self-employed income and £20,000 worth of other income, possibly pension or pension income or something like that, they will qualify. But if it was the other way around, if it was £20,000 worth of self-employed income and £40,000 worth of other income, that doesn't meet the test. So it could, it's a pass or fail based on looking at 18-19. Now, HMRC are very aware that the income, particularly if you're self-employed, does vary or can vary. So if that first test fails, the alternative then is to do exactly the same exercise, but to look at the average of the 3 years, 16-17, 17-18, 18-19. What's your average annual income from self-employment? And does it represent more than 50% of your total average income across that 3-year period? So again, it's a pass or fail. If you meet the criteria over the 3-year period, then you will be eligible, or probably eligible. If you don't, for that, as well as just looking purely 18-19, then you won't qualify for this particular funding. One question I know we've been asked quite a lot on this, and I think a lot of it comes from for example, if people are familiar with the job retention scheme for employees. If you've been furloughed under the job retention scheme and the employer's been funded that way, you cannot work for your employer. That's one of the absolute fundamentals of that arrangement. Under the self-employed scheme, it is slightly different. You can still work, and we're not just necessarily talking about basic admin. You can still go out and earn a living, and still be eligible for grant funding under the self-employed scheme. Now, one of the reasons that HMRC are writing to lots of people, probably a lot of you already had communication, email, text, or a letter in the past few days, inviting you to consider whether you meet the criteria for this scheme. HMRC have information up to a point. One of the other conditions attached to this scheme is you must have traded in the following tax year to work with all these calculations, the 1920 tax year. You must be trading when you apply, i.e. now, or you would have been trading if you could, were it not for coronavirus. And you must be intending to continue to trade beyond the here and now in the current year. And you must also have had some impact financially because of coronavirus. Now, HMRC, they know what you've earned for the 3 years, 16, 17, 17, 18, 18, 19. What they don't necessarily know is that you are still self-employed, which is why you are then having to go through the application process and to check these things as well before you can be given the funds under this scheme. So I've mentioned the application process. Important note here, Thomas Westcott, tax agents generally are not able to make this application for you. It has got to be done on an individual, at a personal level. So as I've already alluded to, HMRC are contacting all taxpayers that they think could be eligible based on the calculations, and inviting people to run the online checker. And again, that's available on the Gov.uk website. There's details of it in the correspondence from HMRC. And you will need your UTR, your unique taxpayer reference, and your national insurance number to actually run that checker. You also do need a government gateway ID and password to make the claim, and that can also be set up once you've run the check. If you run the check and it says, yeah, fine, you qualify, you then, if you haven't already got a government gateway, you can set one up at that point. It will also give you a date and a time. I mentioned before that applications can commence from the 13th of May. Taxpayers are being staggered between the 13th of May and the 18th of May. They've been given dates and times after which they can make an application. So at that point, you would then need to log into your government gateway account and run through the various questions that you will be asked. That you're eligible, that you have been adversely affected by coronavirus. You'll need to provide them with details of your bank account that you want the money to be sent to. And then that's it. Again, going back to some of you may be familiar with the job retention scheme. With that, the onus was on employers to do the calculations as to what can be claimed and to submit that to HMRC. That's not going to happen here. You're not being asked to come up with calculations. We're not being asked to come up with calculations. They've got the figures. They've done them, but it's like there's just this application process to go through to access those funds. Some concern has been raised about some individuals who may not have access to the internet or not be able to do it that way. We have been told that there will be an alternative available, probably by phone, but again, we haven't yet got any details on that. But as soon as we do hear anything, we will sort of let people know, as we have been doing throughout this, of any update. If you run the online checker and it comes up that you don't qualify, and you don't know why, you think, well, actually, I think I should. Do ask. That, we're here to help. I know just A, from reading various things, and B, a couple of examples I've run recently, this checker can be a bit hit and miss. You can put the details in once and it'll say no. You'll do it a few hours later and it'll suddenly say yes. Don't know why, but just bear with the technology, I think, a little bit. But again, there may be a fundamental reason why you don't qualify. That's something that your usual Thomas Westcott contact can explain to you, or not. There also is, if you run the checker and it comes up that you're not eligible, there is the option to ask for a review from HMRC. It's an online request. Again, don't expect a quick response if you do that, because they're indicating someone will phone you before the end of May. So it's not going to happen instantaneously. So I think, yes, that's the end of my section. So now, having sort of been through the detail of the scheme, Mark is just going to run through a few examples of perhaps how the calculations work in practice.
Well, actually, Chris, before we just get to Mark, what in view of the time, because obviously you to explain it has taken a little while. I'll ask you in a second, Chris, a few quick questions about the bounce back loans, this sort of thing, and then I'll leave Mark to answer the queries and the questions we've had about the self-employed scheme. So the bounce back loan, we've had a question from Andrew Southall. Afternoon, Andrew. Does it apply to charities? You said it was a sort of a wide spectrum of businesses, but would that?
Yes.
Or is that one we'd have to get back to, Andrew?
I'm not 100% sure on that. I'd have to check.
Yeah, I mean, something we're not short of is charity experts at TW. So, yeah, we can get back to you on that, Andrew. He's also asking, actually, the 2.5%. Do you know if that's, he says, simple interest or compound interest?
I'd have to check.
I'll get back to you on that one, yeah. And just a final one on the bounce back loan then. It's, we've had a query from a lady, Vicky. She's saying the turnover criteria. Now, I think it was pitched at 25% of the business's turnover, wasn't it?
Yeah.
But that would be presumably, she's asking if it's calendar year or the business financial year. But I would have thought it would be the last financial year.
I would have thought it's going to be based on your last set of financial accounts.
Yeah.
Again, I'm not. I'm not sure what you're going to be asked to produce because it's such a quick process. I think it just forms part of the sort of self-certification that's your turnover. But usually you would look at your last set of financial accounts when you look at anything like that.
Okay. And just a quick query on the business grants and possibly the discretionary fund. Do you know if we have to, a lot of these things like C-bills and what have you, mention that you have to demonstrate loss due to coronavirus. Do you know if that's the case for the business rates grant?
No, there is no requirement at all to have demonstrate any loss. It's the ones that have been distributed so far. It's just based on what's on the register in terms of the rateable value. That's what you get. Yeah.
Okay. Just one further update actually is about the business rates revaluations. They were, I understand, due to be revised in 2021. For obviously the 21-22 year, I gather they're going to be held. So you have more certainty as a business on the rates you'll be paying. So I'm conscious of time. So Mark, if we can switch to you for the figures. Obviously, you've seen the questions just like I have pop up. If you can kind of attend to those as well during your bit. And but I would say, and Jamie's asked me to reiterate this, that obviously, you know, putting Chris a little bit on the spot, any questions we can't immediately answer, we will get back to you. So I would reiterate that. So Mark, over to you, please.
Yeah. Thank you, Patrick. All right, assuming this works. Just before I get started and go through a couple of quick examples as to how we understand HMRC will be calculating the level of SEISS that you'll be getting. Some of the questions that came through while Chris was talking. As Chris mentioned, if you can't for some reason get a government gateway ID, i.e. you have no access online, then HMRC will be providing an alternative. We expect that will probably be a phone line to make a claim. What I would say is if you've got access to the internet, getting a government gateway ID takes a couple of minutes. If you look on our website and our self-employed fact sheet, there's a 7-step guide as to just exactly where you need to go and what you need to do to get that. All you effectively need is an email address. In terms of actually claiming SEIS, then HMRC have said they're going to try and contact everyone, but you don't need to have been contacted by HMRC to actually claim it. You can go to the online checker, again, details of which are in the fact sheets that we've put out. And so long as that says yes, in theory, you'll be able to apply from the date it says. Looking then at what I was just going to come through now, as Chris said, the self-employed income scheme applies only to self-employed people, i.e. where you're directly a sole trader or you're a member of a partnership. and it applies equally if you have multiple self-employment. So you could have your own sole trade and be a member of a partnership. I'll run through how the calculation works in each of those scenarios. And it's a very simple calculation as we understand it. It's based on the information HMRC hold. So where they refer to taxable profit, it is the figure that you have paid tax on, i.e. what went on your tax calculation. They have said that it will be, if you've got brought forward losses and you're a sole trader, those brought forward losses will be ignored, as will your personal allowance. So it is literally the taxable figure that went on your tax return before any of those reliefs. The one exception to that is where you're a partner in a partnership and you had brought forward losses within that partnership. They will take those brought forward losses into account when looking at what your level of profit is in each year. So looking at some numbers in various scenarios, if you are a simple sole trader and you had income from that self-employment of 20,000 in 18-19, 20,000 in 17-18, and a loss in 16-17, it's a simple calculation. You add all three numbers together. So you've got 30,000, you divide it by 3, 10,000 average, divide that by 12, multiply it by 3 for the 3-month payment, and 80% of that, you in theory would get a £2,000 payment, is what we're expecting. If you only started trading part way through 16-17, for example, from all the guidance we've seen, there is no apportionment for where you start trading partway through a year. So it will still be divided by 3, even if you only traded for, say, 1 month in 16-17. If you've got a break in your self-employment, so for example, you might have been self-employed in 16-17, ceased trading at that point in time, went into paid employment in 17-18, and then started a self-employment again in 18-19 and still are, you essentially ignore the periods before your break. So in this example, you would simply say, well, because you had a break in 17-18, doesn't matter what 16-17 was, you simply do the calculation on 18-19. So in this scenario, it's 20,000 divided by 12 times 3 at 80%, I think would mean you get a £4,000 payment. Partnerships, it is necessary to look at each individual partner's position. Some could qualify and some may not. So I've looked at 3 scenarios here to try and illustrate some points. So you've got partner 1 has partnership income of 30,000 in each of the years. Their average is 30,000. Should give them therefore a payment of £6,000 for their 3 months. Partner 2 and slightly more at 40,000 a year. In theory, you do the same calculation, average on 40,000 divided by 12. That works out at more than £2,500 a month, and therefore their payment is capped at the maximum of £7,500. Partner 3, though, in this partnership is incredibly unfortunate. Their income is more than the 50,000 limit. In the example, I'm assuming it's the same income every year. It's more in 18-19, it's more on average, and therefore they wouldn't get anything at all. The one thing I would say is it will also depend then on what your partnership agreement says. It may be that your partnership agreement says that any money you receive, i.e. so what partner 1 and partner 2 receive, will have to be put into the partnership pot and divided. The guidance from HMRC on this does say that if a payment is made out under the SEISS to an individual partner, irrespective of whether it goes into a partnership pot, that money should be paid to the partner that was able to claim it. So partner 3 shouldn't benefit from it. That might cause some issues within partnerships. And then looking at what happens if you do have multiple self-employments. So say you've got an individual partner, he has a partnership income in each year of 30, 20 and 10, and also has a self-employment that generates a profit of 20, 20 and a loss of 10. Effectively, you just add it all together and come out with what the average is. So in this scenario, it would be the 30,000, and that, as a result, he would then get 6,000 overall. And within all of those scenarios, I'm assuming that their other income is always less than 50% of their total income. So either they haven't got any other income or they've got more than 50%. What I am seeing on a number of sites is people saying, well, we meet all the criteria, but it's saying that we don't qualify. In a number of scenarios, I think that they are, for some reason, ignoring all their pension income. They think it shouldn't be taken into account. When looking at the 50% test, it is all of your other income, excluding the self-employed, that needs to be taken into account. Where you have a holiday business, holiday let, generally that will not be treated as self-employed income, although it's treated as trading for certain parts of the tax law. For the purpose of this, it is not treated as self-employed income, in that no national insurance is payable on that income. And therefore, if that's your only source of income, unfortunately, the self-employed income scheme doesn't apply. Position is slightly different for B&Bs, where it would generally be classed as self-employed income and have been disclosed as self-employed income. Couple of points that I would also just want to pick up on in terms of when HMRC are basing this on. So everything is looking at returns filed for 18-19, 17-18 and 16-17. The cut-off for filing those returns is effectively, if you'd already filed a return on time, which the vast majority of people will have done, then what HMRC had on file at the 26th of March is the figures they will use for their calculations. That includes, even if you were under an inquiry and they've made changes subsequent to the 26th of March, they will still only use the figures at the 26th of March. The one exception to that date is if you hadn't for some reason filed your 18-19 return, you had until the 23rd of April in which to file it for all those figures to be taken into account for this calculation. The other side of it is, as Chris mentioned, one of the requirements is that you were still trading in 1920 and either are still trading in 2021 or would have been were it not for the pandemic. The revenue accept that if you're on maternity leave or paternity leave and claiming those allowances either in 1920 or are currently doing so, that is still classed as you continuing to trade, so you still meet that. And one point for farmers, especially those that have been claiming averaging relief on their tax returns, the calculations are based on the profit before any averaging calculation is done. So that will hopefully increase, in some instances, the available payments. And although it's unlikely to apply, the one other restriction on claims and the declaration you'll be asked to make is around state aid, and that you do not breach any of the state aid balances. Effectively, you've not received state aid of more than £200,000. And on top of that, there's an additional €800,000 around coronavirus reliefs. Those reliefs are slightly less if you're in the farming industry. I think, Patrick, that's covered.
Yeah, Thanks then, Mark. Just a couple of queries and questions that we had earlier. Obviously, with the self-employed scheme, the business, if I'm correct, has to demonstrate it's suffered loss due to COVID-19. Is that just a sort of a box ticking exercise on the application, or is that, do you have to demonstrate, what proof would you need that you've suffered loss? Or is that
sorry, go on, Mark.
Yeah, so it is, as far as we understand, it will just be a tick box election, very much like it is for job retention, that you essentially you've furloughed people because of the pandemic.
Okay.
How HMRC will check that, we don't know. We have had some internal discussions around if you've got multiple trades, it could be that one trade is impacted and one trade isn't. In theory, looking at the guidance, it's have you been affected? If one is affected, then in theory you claim and you potentially could benefit because it's just an average of your total income. Yeah,
okay. And if you were a partnership, you mentioned obviously your examples there, presumably you can't revisit your 18-19 partnership return to have an amended profit split, can you?
No.
That chap who's on 60,000, bring him down a bit so that everybody can qualify.
No, as I said, the cut-off date essentially was the 26th
yes, so
of March.
That is, you are too late. Yeah.
So if you filed any amendment after that date, it would just be ignored for the purpose of this release.
Yeah, and that also includes the capital allowance potential, capital allowances to increase your profit and hence the amount you would get. Yeah, okay. One question actually we've had about the period that HMRC would look under. Now, obviously they would go to 16, 17, 17, 18, 18, 19. But if you've only had part of the period in, say, 16, 17, because you commenced business in, say, halfway through the year, presumably they would kind of treat that period as a sort of half year. They wouldn't sort of say divide it by 36, would they? They would divide it by 30, presumably.
No.
There's no indication within any of their guidance that is what they will do. It is all simple yearly average. So if you were trading at any point in 16, 17, and then all 17, 18, and 18, 19, they will divide it by 3 before they do the monthly. They won't divide it by 36.
Right. Okay, that's worth noting. Okay. And they should be getting their money really by, I've seen it from the 25th of May. Is that right? Does that sound right to you guys? For the claims.
In theory, if you are invited to apply on the 13th of May, you should get your money on the 21st.
Okay. Yeah.
But it's 6 days from your application, which can be between the 13th or the 18th.
Yeah.
It's going to vary depending who you are and what date you've been allocated.
Yeah, fair enough. We've had a question comes from somebody who's saying that their parents retired at the end of the tax year, the 2019 tax year. Presumably, they wouldn't get any. They wouldn't be eligible for this relief because it's continuing businesses.
That was an early question, wasn't it? I mean, that's one of those examples I was referring to. The letter, because as far as the information from the HMRC's records are concerned, they would qualify, but you've got to be in a continuing trade, and if they've retired in 2019, they're not. But so you wouldn't be eligible to make a claim under this.
Yeah. Okay. And one point I would actually, it's come through in the chat, so everybody would have seen it. Oliver making a very good point about the SEISS amounts that the government would give the self-employed do count towards universal credit and actually the tax credits as well, wouldn't it? It would affect your claims for that. So just bear in mind, okay, not a loan, you don't have to pay it back, but it would count as business profits, wouldn't it? So you would pay tax on that and it would count towards your universal credit calculations. I'm going to wrap it up in a sec. Have you guys got anything further just to add before, or I think we're sort of. I am conscious that we have overrun to some degree. Judging by the questions, it is quite a lengthy and detailed kind of subject. And I think this is why we just sort of said, well, okay, we'll just have one subject to today's webinar. As I've said before, we will attend to all the questions that we haven't managed to get to, either sort of ourselves or if you're, as I say, if you're a client of TW, your usual partner, please do again email us at events@thomaswestcott.co.uk if there's anything you think we haven't covered or have a further question. Obviously, it's the VE bank holiday sort of this weekend, so I would say that we'll meet again and all that. And actually we can, because we have 2 further webinars planned. We have a charities one planned for next Thursday, 2 p.m. is the scheduled time. So look out for that. And the day after, we also have another update similar to this. And we'll be talking about the return to work and the issues relating to that. I'll be hosting for that one. And alongside me, I'll have our managing partner, Shona, who will be talking from a TW regional employer of 275 people perspective. And I'm delighted to say we also have John Dunkley, who's the head of employment law at Woolen Solicitors, to give the employment law angle and what employers need to be wary of. Do look out for our notices relating to those webinars. That's it for now. So thank you very much for watching. Apologies we did run over. Have a great VE Day weekend and stay safe. Thank you very much and thanks to the team. Cheers.
Thank you.
Yes.